every successful business has one thing in common: financial clarity. Not flashy branding, not viral ads, not a perfect team. Clarity. And that clarity comes from a system that most entrepreneurs avoid, misunderstand, or completely ignore: bookkeeping. It sounds dull. It sounds technical. But bookkeeping is not about data entry or tax forms. It is about knowing exactly where your business stands at any given moment. It is the quiet system that gives you the power to make smart decisions, scale with confidence, and sleep at night without wondering whether you are accidentally going broke. So why does no one explain it properly? The first thing to understand is this: bookkeeping is not accounting. That distinction matters. Accounting involves high-level financial strategy, things like tax planning, interpreting financial reports, and guiding long-term decisions. Bookkeeping, on the other hand, is the daily or weekly recording of every transaction your business makes. It is the groundwork. It is the raw data. Without clean books, accountants are just guessing. Without accurate records, every report, forecast, or decision is built on a shaky foundation. Bookkeeping is the process of capturing the truth of your business in numbers. And when it is done right, it becomes a superpower. Bookkeeping starts with recording transactions, which means documenting every time money comes in or goes out. That includes sales, expenses, fees, loans, investments, refunds, payroll, and transfers. Most people think of bookkeeping as something you do once a month or when tax season arrives. But that mindset leads to chaos. The smartest entrepreneurs treat bookkeeping as a weekly discipline. Whether you use software like QuickBooks or Xero, or even a spreadsheet in the beginning, the key is consistency. Every transaction should be logged with the right date, amount, category, and note. Doing it while the information is fresh prevents errors, keeps your books clean, and saves you from headaches later. Next is categorization, and this is where many people get stuck. Every transaction in your business falls into a category: revenue, advertising, rent, software, utilities, cost of goods sold, and so on. These categories help you see where your money is going and how your business earns. But more importantly, they allow you to generate accurate financial reports. Many entrepreneurs mislabel transactions or leave them uncategorized, which leads to inaccurate profit and loss statements. You need a clear, standardized set of categories and rules. For example, if you buy a new laptop, is that equipment or a general office expense? If you pay a contractor overseas, is that wages or professional services? Categorizing properly is how your data turns into insight. It is not just labeling, it is storytelling with numbers. Then comes reconciliation, the step almost nobody explains properly. Reconciling means comparing your internal records, set like your bookkeeping software, with external sources, like bank statements or credit card statements, to ensure they match. This is how you catch errors, missed transactions, or duplicate entries. Every month, you should reconcile every account. If your bank says you spent $4,210 and your books say $3,980, something is off. Reconciliation keeps your data honest. Without it, you could be working with false numbers and not even know it. It is the difference between assumed clarity and actual clarity. Let us talk about something that never gets enough attention: accounts payable and receivable. These are two sides of the same coin. Accounts payable is what you owe, like bills, subscriptions, and outstanding invoices from vendors. Accounts receivable is what others owe you, clients who have not paid you yet. Bookkeeping tracks both. When done correctly, it gives you visibility on your true cash position. Just because your bank shows $10,000 does not mean you have $10,000 to spend if $6,000 of it is already owed to others. And if $8,000 is owed to you, but not yet received, that is future money, not current money. Bookkeeping clarifies this distinction and allows you to make informed decisions instead of relying on misleading balances. Here is a truth that most people avoid: if your books are disorganized, your business is already leaking money. Maybe it is in forgotten subscriptions. Maybe it is in unclaimed deductions. Maybe it is in late payments, duplicate charges, or poor spending habits you have not even noticed. Bookkeeping reveals waste. It shows you what is unnecessary. It highlights where money is stuck or bleeding. You do not need to become an accountant to benefit from this. You just need to pay attention. Your books are not just numbers, they are signals. Now, here's the part no one says out loud: bookkeeping is not about numbers. It is about trust. Investors, lenders, partners, and even future buyers all care about one thing before they write a check or make a deal. Can they trust your financials? Clean books mean transparency. They show you are serious. They prove you are responsible. Sloppy or incomplete books are a red flag. They say you are not in control. If you ever want to grow beyond yourself, to raise capital, get a loan, or sell your business, your books will either open the door or close it permanently. Bookkeeping builds your reputation before anyone meets you. So, how do you make bookkeeping manageable instead of a headache? First, set a routine. Choose one day a week, Friday afternoon or Monday morning, and block out 30 to 60 minutes. Use that time to enter transactions, categorize them, and reconcile accounts. Do it before it piles up. Weekly bookkeeping is 10 times easier than monthly catch-up, and it eliminates that looming anxiety that always seems to hover in the background. Make it a ritual. It is not just admin, it is leadership. Second, use the right tools. You do not need to hire a full-time bookkeeper in the beginning, but you do need a system. Cloud-based tools like Wave, Zoho Books, or FreshBooks are ideal for small businesses. As you grow, you may move to more robust platforms or even outsource to a part-time professional. But even then, you should understand the basics. Never hand over control without understanding the core mechanics. This is your business. You need visibility, even if someone else handles the input. Third, stay organized. Keep digital copies of every receipt, invoice, and bank statement. Use folders labeled by month and year. Back them up. Many bookkeeping software platforms allow you to attach receipts to transactions, which is even better. This makes audits painless, tax preparation faster, and troubleshooting easier. Digital clutter leads to confusion. Order creates confidence. Let us go a little deeper into why bookkeeping matters for growth. Growth requires planning, and planning requires data. Want to launch a new product? Open a second location. Hire a team. You need to know your margins, your burn rate, your top expenses, and your cash runway. Bookkeeping is what provides those numbers. Without that data, growth is reckless guessing. Many businesses collapse because they grow without understanding their actual financial health. The math did not support the ambition. Clean books make growth sustainable. They show you when you are truly ready, not just when you feel ready. Bookkeeping also helps you optimize your tax strategy. Every dollar you can deduct legally reduces your tax burden. But if you do not track it properly, you will miss those deductions. Meals, travel, equipment, home office expenses. All of these can save you money, but only if your books capture them with precision. Sloppy records lead to overpayment and audits. Accurate books lead to efficiency and savings. Another hidden benefit is that bookkeeping helps with pricing strategy. When you track your cost of goods sold correctly and know your overhead, you understand your true margins. Many entrepreneurs underprice their services because they underestimate their costs. With detailed books, you can analyze your profitability by product, client, or service line. You may find that one offering is fueling your business while another is slowly draining it. This insight allows you to refine your pricing, cut dead weight, and double down on what works. Let us be clear: bookkeeping is not optional. It is foundational. Whether you are running a side hustle, a consulting firm, or an e-commerce empire, your books tell the story of your success or your struggle. The sooner you master this discipline, the sooner you gain control over your future. So the next time someone tells you bookkeeping is boring, remember this: it may not be sexy, but it is the difference between building a business that survives and one that thrives. If you are ready to take full control of your finances and scale with strategy, watch the next video. It will walk you through how to create your first financial dashboard that shows you everything you need in 5 minutes or less.